Yeah, good question. I think so. So the difference, I would say is, PE is relative to those other things you just mentioned, is a very long-term play. Like you make an investment. First off, it might take you a year to get that investment done. From finding the company to researching it, negotiating, all the ups and downs in that process. It can take you a year just to make the investment, and then you might be in the investment for 5, 7 years. So I think the thing that differentiates it the most from lots of other things is just the duration of the strategy, the outlook, the um, perseverance. There's a lot that goes into making a successful PE investment over a very long period of time, and that's hard to appreciate. In investment banking, you might work really, really hard for like a couple months, but then the deal's done and you move on to the next thing. Capital markets, I mean, like literally you go home at 4 o'clock and like you forget everything that you did the day before and you start over again, at 9 o'clock the next morning. So, and even in venture capital, the hits tend to happen, sort of relatively rapidly. Like you make investments in a business and like, they fail quickly, or then they start to succeed. So like there's a little bit more, in venture capital where it like kind of happens by itself. I'm not saying it's easy, and I'm not saying you don't have to be skilled to do it, but I'm just saying, in PE, it's a lot more hands-on and it takes over a long period of time. So yeah, I guess that would be the answer.